Let's bring on board our chartists and figure out where the market is headed, not just the index, but individual sectors as well. We've got Kunal joining in to highlight exactly that, and Rahul Shah as well with us. Kunal, firstly on the index, because the futures are already at 21,400 plus.
Yeah, so again, a good day for the markets. 21,400 for the Nifty on the futures, 450 on the futures. And I think more importantly, Bank Nifty is coming about that 48,000 mark on the spot levels. So I think that's also another strong comeback from the banking index, especially given the fact that today the first half was completely the Nifty IT index, which managed to outshine itself. So I think it's a good comeback from the banking pack. And overall, it tells you that when the markets are going through such a kind of a strong momentum, that this sector churn is also helping the near-term trend for the indices. We've seen a phenomenal last couple of weeks for the indices, 2,500 plus points for the Nifty so far. And with the formation of 9 gaps, it still looks to be on a more of an accelerating mode rather than a pause kind of a mode. So yes, we've had those 200 to 50 points mild correction for the Nifty, but it's not deterred the trend for the indices.
Right. Nooresh, hi, afternoon. Let's get in a word on the Nifty IT then. A solid 2-day move, still off from its previous peak, and of course individual stocks as well. Do you think it's playing catch up with the rest of the market, and do you see a consistency in the move from here to come as well?
So in terms of IT, the expectation was the mid caps do better, but today is a day where everything has done well. So clearly an indication of momentum catching up across the board. So the Nifty IT index itself has finally crossed almost a 12 to 18 month high. We were last around these prices of 35,000, closer to that, back in April of 2022. So clearly a momentum trade here. So I would still prefer the mid-cap IT basket, which has continued to do well. So LTI, Mindtree, LTTS, which are the fresh breakouts. In the large caps, a contra bet could be maybe a Wipro, which is breaking out right now, and it has corrected the most in the whole basket. So overall, yes, the momentum is strong across the board. One could be waiting for a little bit of a dip in the large caps to participate, but the mid-cap ones could continue some more.
Rahul Shah also joining us on the show. Rahul, it's a bit funny because a couple of days ago when the index was down 2%, we were trying to find out reasons why IT stocks were underperforming. And suddenly after the Fed decision, the mood has completely changed. Do you think the stocks are running way too ahead of the fundamentals?
Hi, good afternoon. I think way the markets have been, I think, we'll be keep on asking questions whether fundamentally whether they're correct or not. So I think if we look at the entire space as a whole, I think last couple of months they've underperformed vis-a-vis the overall markets if you look at it. So I think post this quarterly numbers, if we see that, then I think they've underperformed vis-a-vis other things. So I think still room for the IT to catch up, and I think way the stocks have performed and way the numbers are, I think the valuations are justified for it, and I don't see any reason why there could be that the stocks have just run hard about the fundamentals. So I still feel value in the large cap IT names like Infi, TCS, HCL Tech, which remains our top bets. So I don't think so there should any kind of a way where we're talking about this, the markets are way ahead of fundamentals. And if you look at overall Nifty valuation as well versus the entire market, so still I think if you look at 10-year PE average, what we talk about, it's still I think it's available at cheap at 18.9 times earnings. So I think I feel that I think still the markets have not run up. So to be much looking at it that on the index level that we are at all-time high, but that's saying feel that a lot of move from here in the markets as well.
Let me go across to Nooresh to find out which are the top bets coming in from the metals pack, because that too is shining away. Nooresh, your view?
So in terms of metals, Hindalco looks the most promising. The stock has slowly trended up and could catch momentum going forward. So at current levels as well on dips, that could be a stock which could actually go back and hit new all-time highs in the metal pack. And today Tata Steel has been a breakout, which could be a fresh startup move towards that 155 mark. So I would go with Tata Steel and Hindalco.
So those are the top recommendations coming in, but a lot of these public sector names are still doing quite well, Rahul. Today, PNB became the third public sector bank to cross the 1 lakh crore market capitalization, and SBI is now sitting at all-time high levels. What should one do? Book some profits or continue adding positions?
So I think I've been very bullish on all this PSU banks. So my thought process is I think one should continue to hold on, and I think this is just the beginning. What I feel is a lot of room and upside which is going to happen in this oil and gas
PSU basket. Obviously, after a long time, we've seen State Bank coming back into the flavor, and it was not crossing beyond 620, 630 levels. So I think if we just had a few days back, we had a interaction with the management, and I think very strong commentary coming out from the management side. 13% loan growth, which the management is talking about. Secondly, I think the asset quality is improved if we see the last quarter numbers. And then thirdly, I think the credit cost will come by 50 basis points, what the management is guiding for. So my sense is, I think entire PSU large banks baskets, I think State Bank leading from the front, followed by PNB. I think obviously the stock has been hitting 52-week high for quite some time, and I think still I believe that there could be upside in maybe still Bank of Baroda, which has underperformed vis-a-vis like other banks performs. I think a lot of room for Bank of Baroda as well. Canada obviously has been at a 52-week high.
Yeah, Rahul, I think we have you on a very scratchy line. It's just difficult to hear your audio. We'll do one thing, we'll try and reconnect. But in the meantime, a lot of other stocks are actually doing quite well. Honasa Consumer is again up above the 400 rupee mark, so a 6% surge coming in. In the last few minutes, Godrej Agrovet is one stock which is also doing quite well for itself. So suddenly there has been a bit of a spike on that counter, and then across the board, whether it's Aether Industries, Arvind Limited, Amber Enterprises, all of these stocks are definitely gaining ground. But Kunal, I wanted to talk to you specifically about SBI because there's a 4% move there. And then looking at the other one, Maruti, because that has been a stark underperformer in the last month or so. It went below the mark of 10,000 on an intraday basis.
Yeah, so I think Maruti is a bit of a tricky because from the auto pack, that's one stock which has potential but has been a huge underperformer. So, whether you look at it from the time when most of the auto stocks, the four-wheeler, specifically the likes of Tata Motors, M&M in 2022 mid, when these stocks, they started to bottom out from their, 1 year correction and then started to show signs of uptrend. Maruti had underperformed there. And even in the last, I think, few months when I think M&M and as well as Tata Motors have come back to make new highs for themselves, that stock has also underperformed. So it doesn't come as a surprise that Maruti is underperformed, but I would still believe that 10,000 broadly could be a good support for the stock price. And even though it could probably try and retest those levels, I think from a medium to long term play, it could be a good buying zone for Maruti. So not bearish on the stock, but then expecting the stock to be a very slow and a gradual mover over the near term unless there is some sort of a catalyst in terms of news flow. Now, SBI apparently has been one of the most stronger stocks from the PSU pack, especially from the time when the stock was on the verge of breaking out of a triangular pattern. We discussed the stock a few days back and how the stock was showing potential of a big breakout. That breakout has come today on the back of some extremely encouraging volumes so far. And the good part is that the volumes are also much more stronger on the F&O side for SBI. So this indicates that this could not just be a short-lived momentum, but this could be a start of a trend for SBI.
Okay, that's the take coming in on SBI, but the chart which has really sprung up today perhaps is IREDA, and I think it's the first time since its listing that the stock is seeing any red, still languishing down about 10% as we speak right now. But from a issue price of 32, and I think on the listing day itself, it popped up to about 50 odd rupees. From there, it's still sitting at double levels. That's IREDA in trade for you right now. What about PFC, REC? Are they too seeing any signs of red? Is the market taking some chips off the table? Yes, surely. PFC, REC as well are seeing that little bit of red trickled in for themselves. Nooresh, let's get a chart check going on both PFC as well as REC.
So both these names have made a very large move, a parabolic move in the last 2 months. So every one of us expected some bit of a pause at say 350, 360. The stock has moved up to 420 levels. So in such a case, if it takes a pause, we could go back towards the 360, 380 mark. That's the risk. Out here, the stock has gone up from 230 just 2 months back to almost 430 levels. So in this case, one would expect a pause. Difficult trade to short, but time to take chips off the table or rather the full position.
Okay, so that's the take coming in on some of these power financiers. Let's take a look at what are the other sectors which are buzzing around, and insurance is one space which has been rather weak, of course, on account of the news flow that we have been talking about in terms of surrender value. Rahul, what's your take? Should one just completely avoid the insurance sector because they're better placed, or this is one of those sectors which still has value because the stocks haven't run up, and maybe when the tide turns, these will be the stocks that rally hard?
So I think there should be an allocation in that portfolio, but I think if I look at holistically in terms of in a financial space, then I think the banks, I would prefer private as PSU vis-a-vis this names which insurance names. So I don't think so. There will be a limited upside for all these names because obviously the valuations are still not justified in terms of what they are trading at right now. And I think limited upside, maybe 10 to 15% upside in most of the names which we've been talking about. So my sense is I think the banks will be the better play where the upside could be more and where the market's momentum as well is right now at this point of time.
Actually, some of the stocks which were doing very well in this last leg of the rally between November to December are actually taking a turn for the worse, Kunal. Case in point being Prestige. It's down about 5% today. You also have JSW Energy, which is down 3%. Is this the time one should book profit? And even TVS Motors today down 2%.
No, I think it's rotation of the same capital, Anisha, which happens because, at some point of time, the real estate stocks, which were up, I think, 25% in this last, 25 or 27%, if I'm not wrong, in this last leg of uptrend from 18,800 on the Nifty. So there's bound to be a point where traders would be like, let's trim the profits over here and then shift on to some other spaces, some other sectors which are breaking out. For example, today there are two prominent sectors which are breaking out, of course, is the IT index as well as the banking stocks, especially the PSU banking names. So I think, I wouldn't be surprised that this pattern probably happens for another couple of days. We'll see other, performing sectors in the last, I think 2-3 months. Maybe something from the pharma pack which would probably get into a bit of a corrective phase. Real estate stocks, that move is not trickled into the other names like DLF, Oberoi Realty, Godrej, etc. So I think that move could probably happen where you might see these stocks ebbing off a bit more, trimming off gains, but I think the move would probably continue in some other spaces like the IT and the PSU banking stocks.
Okay, that's the take coming in on what you're seeing on some of these varied sectors. In the meantime, it continues to be metal really, which is holding up today. There's, of course, IT, which continues to look good as well. And then, of course, there are those crude sensitives. Look at ONGC. That's perked up another 2.25% today. SBI has been going very strong. And of course, there's Adani Enterprises as well, which is going good by about 3.25%. The market does have its fair share of laggards too. Look at ICICI Bank, HDFC Bank, or for that matter, Axis, and even Kotak, which is lying just about flat. So they are also sort of weighing heavy on the index as we speak right now. Nooresh, what is your reading now on the Nifty Bank in particular, especially the private banks within that?
So if you look at the Nifty Bank, we've continued in momentum, but the largest weight, which is HDFC Bank, has still not hit a new all-time high. So clearly that tells you the structure of the market is beyond the top heavyweight. You've ICICI Bank, which has made a new all-time high, but has not seen a lot of follow-up. So if you look at the whole index and the stocks, a lot of stocks have made fresh all-time highs after 1 year, in some cases 18 months. So in such a scenario, it should not be a small move. It should be a structural breakout, which should continue. So in this case, we could go all the way higher and higher. The best way to trade this momentum is to keep a trailing stop loss. And now the trailing stop loss would shift closer to the last swing low a few days back, which is around 47,200 on the spot Bank Nifty. So overall, the new leaders are coming up. We saw leadership coming up from Axis, which did a first move. Then we saw ICICI Bank, and today we have SBI. So the only ones left are HDFC and Kotak, which are yet to show any leadership move. So overall, the whole banking space looks interesting, but we are yet to see HDFC and Kotak show that same strength.
Let's see when HDFC and Kotak do return to that solid growth trajectory. But time now to slip into a very short break. Rahul, we let you go on that note. Thanks so much for making time. But as we head into this break, listen in to